Hello everyone, it's Jamal Thomas. Welcome to the Progressive Soapbox. I had this one queued up, so I'm going to do this one before the day's over with while I'm thinking about it. My rule always has never changed. You have dollars or you have pitchforks. You have one or the other. Meaning you have either a bunch of money going behind a particular candidate that's pushing that candidate to behave a particular way, or at the very least, let's say influencing. Let's use that term, influencing a candidate to behave a particular way. Or you have a bunch of human beings with pitchforks standing out their office, influencing him to behave a particular way. Him, her, whatever. I think that's our political system. Meaning you have capitalism or you have democracy, but you can't have both. It is an uneasy pair that these two things try to interact with one another. And I know one is a political system and the other one has to do with this kind of monetary, this exchanging of goods and resources. But the fact is, one, even though it starts off being somewhat major or in charge of, it becomes subordinate to the other. The capitalistic system infects the democratic system in a way that starts to contort the levers of power into the direction of the people with the cash. I mean, think about it for yourself. This makes pretty straightforward common sense. You have a system that allows people to get massive amounts of wealth. And in using this massive amounts of wealth, they take that wealth and they inject it into the political system, because in our political system, cash equals speech. So if I have $100 billion, I can yell at the top of my lungs at an unprecedented value. Unprecedented. Because the truth is, the amount of money that these people have is not necessarily in a direct relation to the resources that they have, meaning the world. So yes, this person has $100 and something billion, but is it really in alignment with what the person has actually done? Meaning, has that person really done stuff that would give him hundreds of billions of dollars in compared to what other people get? And if we're saying that equals speech, then we have problems, because that means that you have a very small segment of people that can scream with unprecedented volume, and the rest, everybody else, the overwhelming majority, gets drowned out in the process. The power that people do have is of the pitchfork, not necessarily of the cash. In which case, I make the point again, you have dollars or you have pitchforks. Either those people are terrified that they're going to be voted out of office, or they're terrified that money is going to be used against them. And let's be honest, it's not just terrified that their money is going to be used against them. It's like a salve. It feels good to rub your body in dollars. You wake up in the morning on a bed of dollars. You sleep on a pillow fluffed with dollars. This is from this company. This is from that company. This is from people within this particular industry or that industry. You shower and dollars come out all over your body. You can imagine that feels pretty decent. That's easy to do. And then you'll have the other side, pitchforks. I'm making this point here that it is easy to go in the direction of cash if there is not somebody standing over here with a bat. In which case, oftentimes, in our political discourse, we don't have the guy standing with the bat. We don't have the guy standing with pitchforks. And even when you do have people complaining and bitching and moaning, they're often isolated into these little factions that can be entirely ignored. You have a group of Republicans that are so rabid and off the cliff that many Democrats are terrified to even think about questioning whether or not they should continue to vote Democrat. This is our political system. And in that level of chaos, oh, dollars, they speak. Dollars speak like nobody's business. This is splintered news. And recently, that bill that passed allowing a rollback of certain provisions under Dodd-Frank. Well, you had some Democrats that went along with that. The resistance went along with them passing this stuff. And the question when stuff like this happens is, man, I wonder how much did they get out of it? And Splinter News answers that question. It seems that those Democrats that voted for this got a lot of money. They got a lot of money from these industries. They woke up on a bed made of money. They dreamed of money coming from the banks that they've just deregulated. Democrats who voted to roll back banking regulation took lots of money from banks. You don't say. You don't say. This is short. I thought there was a part in this that I highlighted, but not so much, probably just did the whole thing. House of Representatives voted on Tuesday to roll back parts of the 2010 Dodd-Frank financial regulation implemented in the wake of the recession. The bill, which whittles down consumer protection, passed 258 to 159 with help of 33 Democrats before President Trump signed the bill on Thursday. Perhaps, by the way, the argument that many of these guys make is, it's community banking, it's community banking, it's community banking. That's what Democrats say. They continuously say, oh, we're helping the community banks. That's why we're doing this. They always look for some excuse in order to cover horrible behavior, horrible, salacious behavior. Nobody is screaming about helping the banks. There is nobody who's walking around saying, you know what? We need to help the banks. The banks aren't doing well enough. They aren't making enough cash. There aren't enough section of our particular political society. No, we need to help the banks. Fuck healthcare, fuck education, fuck making sure people have access to the things that they need. No! The banks. We like Obama on this. We need to help the banks. Nobody is saying that short of a few bankers. The rest of the world is not thinking that. The rest of the country is not thinking that. And yet, you have 33 Democrats that thought the best and the only thing that they had to do that particular day was voting on a regulation, Rollback Dodd-Frank. What they're voting back on. So, if you remember, Bear Stearns was a company that went tits up. And when Bear Stearns went tits up, the financial market essentially flipped out. Oh my God, we can't cover our bets because we've been running a Ponzi scheme for the past X number of years. And the financial system started to go under. The United States government, even though all these right-wingers talk about the government and everything else shouldn't be part of the process, and you don't want to create this thing of too big to fail and everything else, that's essentially what they did and iconized the term too big to fail. We can't let it fail because our entire financial system will go under. Bear Stearns, if I am not mistaken, had $200 billion in assets, something to that effect. This banking bill takes us down to $50 billion, meaning the oversight, takes the oversight up to $250 billion. Bear Stearns at $200 billion. So what I mean by that is the federal government doesn't necessarily look at what the bank is doing unless there is $250 billion in assets at that bank. The housing crisis, or the crisis that took everything under, there was $200 billion at that company. That company was supposedly evaluated at $200 billion. Meaning, they would not have even caught it with the regulations that they're imposing. They're rolling this back. They're rolling back Dodd-Frank. And if Dodd-Frank was enacted at the exact same time that was taking place before, we still would have missed it because under these regulations, they would not have been paying attention to that particular bank. I hope I made that clear. I'm fumbling my words on this. But let me try this one more time. The amount of assets that they're going to be able to look at and monitor is up to, I think, $250 billion. Beforehand, it was $50 billion. So if you have $50 billion or above, they would monitor you. You would be paid attention to. Well, now, these guys are moving it up to $250 billion. The bank that went belly up had assets of $200 billion, meaning that bank would not have even put on the list for monitoring. Yes, they can take an option of monitoring banks if they want to. They can take a separate step. But just the weakening of it, when nobody is asking for the weakening of it, when nobody needs the weakening of it, short of a few extra banks. And then the lie that the Democrats are using, or let's say the fig leaf that they're walking around in, where you see vaginal hair and testicle hair showing on the sides. That fig leaf is we're helping community banks. Fact is, the whole point of the Dodd-Frank thing was to prevent another too big to fail scenario. And the scenario that they put into place would have missed what this legislation was drafted to prevent. I hope that makes sense, and I hope I'm saying that right. Let's take a look at this. I mean, but these people got paid handsomely for their vote, so I guess it doesn't matter. Perhaps not shockingly, many of the Democrats who voted for the bill that would benefit banks, both large and small, received considerable campaign donations from the financial sector. You don't say. According to an analysis by campaign finance reporter Donnie Shaw, Senate Democrats, 16 of whom voted for their own version of the bill, on average received more than 4 times as much money from commercial banks than Democrats who voted against the bill. You don't say. That trend also carried for House Democrats who backed the bank deregulation bill on Tuesday, as Shaw writes. According to my analysis of campaign contributions in the current election cycle, Democrats in the House that voted for the bill received, on average, a little more than $20,200 from commercial banking industry. The Democrats that voted against it received just $7,200 from the industry on average. Oh, those banks need to up their bribes. Those banks need to up their bribes. Two House Democrats stand out for having taken especially large sums from banking cycle, Kristen Sinema and David Scott, and both voted for the bill. Sinema received donations from PACs and banks that will be deregulated under the bill and trade groups that lobby for them, including the Mortgage Bankers Association, Synchrony Financial, American Bankers Association, and the Consumer Banker Association. David Scott has also received contributions from banks that will benefit, including Credit Suisse, Regions Financial, SunTrust Banks, UBS, Barclays, and more. All told, Sinema received more than $1 million from donors in the financial sector during the 2016 election cycle. Last month, she also voted to weaken the Volcker Rule, which prohibited banks from making speculative investments using their customers' money. Splinter has reached out to Seminole office for comment. We'll update the post if we hear back. Democrats who supported the spring's slate of bank deregulation bills have argued that they will provide relief to smaller community banks while keeping regulations on larger Wall Street banks in place. Claims have not held up very well to scrutiny. On the flip side, some House Democrats who received significant donations from the financial sector voted against the bill. New York Representatives Carolyn Malone, who represented part of Manhattan and Queens in Congress, received $46,900 from the commercial banking industry this election cycle. She voted against the bill on Tuesday, a decision perhaps influenced by the fact that she is facing a competitive primary challenge, Sudhir Patel. As long as Citizens United remains the law, and until Democrats voters successfully scare their representatives into shifting further to the left, this is exactly the type of governance we can expect. And I can't agree more. We're something different. As long as you're okay and complicit with Democrats, thank you for the money, and there is nothing pushing their ass where they know they can lose their seat, not waiting until they get into office and then we work it out. No, it all burns. It all burns. Either you toe a different line or you fail. That needs to be the utter and understandable way in which we engage in the political analysis and the political debate. If you're willing to vote for somebody who's not going to represent your interests because you're terrified of the other guy, then you are part of the problem. I understand that the other people are maniacs, but have you looked at the people you're supporting? What do you actually want to take place in the world? And do you honestly believe that those things can never be affected just by continuously voting status quo, one election after the next, each moving further and further to the right until you're like Sam Cedar saying you're willing to vote for one concentration camp less? It's time to change. And continuously voting for the same is not going to get you there. So, I'm not going to keep this one long. I just wanted to make a point, and I like the article. Good job, Splinter News, on that particular piece. Those Democrats got paid a magnificent amount of money. And so, yeah, they can sleep on a bed of money. Their integrity, well, that's something else. Integrity is expensive. So, I'll leave it at that. All right, guys, if you enjoy the content, please feel free to share, like, subscribe, and of course, you can always support through Patreon. Thanks, everyone. And